Welcome guys, it's the Market Sniper, and we are going to be talking debt markets today and why some interesting things could be happening in specific reference to the UK. So on our YouTube history, in fact, it's worth reminding people that we have had a look at quite a few debt videos that have been created, and debt markets don't always get the most views. Here's why you should care, why we'll keep it interesting, and there's a special reveal and almost a conspiracy theory that's going to come out amongst us that could affect you in August. The waning of the summer, that's right. But let's just have a look at this. If you look at UK debt, we've covered UK debt a number of times, infrequently, but we've continued to check in and warn that rates are going higher. UK housing is in. The high is in, and most of it is largely going to be down. And that rates will go up, and the cost of borrowing will go up, and that's going to be part and parcel of a number of things. Look at me. Why are those things? Well, first of all, they are pretty highly indebted. That's why they had the Truss pension crisis when she offered to do a stimulus budget, which was actually going to grow the economy, but needed to draw even more on government debt, keep tax cuts, keep people spending, investing, etc., and holding more of their money. And in the end, thanks to Bank of England, A, not raising rates as fast as the US, and B, due to pensions not getting the returns they need on their bonds and having to do a sell of the debts markets, spiking the rates, and in actual fact panicking the markets that ended up needing a combination. And the stimulus budget was given the bulk of the blame for that, when there was quite a bit more to say in actual fact. I don't bat for any politician, but Truss and Kwarteng were thrown out very quickly and made the 100% scapegoat of something that they were only a little piece of, for which the Bank of England should have come in for far greater scrutiny. But it is the higher power, it's the permanent state, as you know. And it has all the kind of people like Mark Carney previously at Bank of England, also Canada, also of Goldman Sachs fame. You know the type. Special parties seen with Ghislaine Maxwell, family socializing, no list, no crimes, remember. Anyway, I digress. So the debt markets, YouTubes, we've done on Japan, we've done all of Europe, we've done the UK many times, warning of these upsides, and every now and then we come in and we do an update on that. So the rates that the UK are currently facing on their 20-year and 30-year are higher than the rates when Truss was thrown out. Well, that's a combination of a few things. A much faster rate, we'll come to the chart, had spiked on Truss. And since then, the debt markets are seen with a far more jaundiced eye. So all debt markets have been creeping up, including the US, including all the Western nations, as you know. Not China, which is around 1.6%, not Switzerland. So you do understand those that have specifically pursued policies of unsound money with great vigor as part of a controlled demolition policy, not incompetence intent. Controlled demolition, you've got to go in, put the explosives in there, and then say free fall. That small little block at the top of the tower, it free-falled all the way and crushed the much heavier block that was below it. That's what you're going to say. That's what you're going to say. Who could have thought it? You know, like Greenspan, black swan, they will scream. Hark, they will say. Something that rhymes with hark anyway. Hark, look at that. It came out of the ether. Anyway, so here are all the videos we've done in terms of debt. And we've highlighted it on Japanese. We've highlighted it on UK. We've shown you all the nations that are very specifically well set. And you're talking about 3 years ago, 3 months ago. We've been ongoing harking on about this because it's the foundation of your financial system. Yeah, and if that goes, your ability to borrow goes, and that's where the trouble really starts. Now, the UK has actually specifically set out to see itself get destroyed and almost wants to hit the bankruptcy court before America. It's like pushing to the queue, front of the queue. Mine out of the way, mine out of the way. Stand in line, please. Yeah, move deeper into the train, please. You know, that guy. Yeah, the UK guy. He's bullying his way to the front and says, you know, me first. I actually want to do an even better job of destroying my nation than America, which is a hegemon, has done, I want to go first. I've tied to the mast. We've actually prepared a blog post of how Japan and the UK are, in essence, slave. The king dollar hegemon is going to die, and he demands to be buried with his slaves. And the UK and Japan, in terms of finance, very weak yen recently. We'll be talking in other videos about that. Tied to the mast and buried with a master. You know, you kill your slaves first to ensure that they get buried with you as the aging king. And the United Kingdom is certainly that, especially when it's been passing over gold as well. Anyway, let's not get into too many other topics. So there's been a lot of YouTube coverage there in terms of what we've done, and said, let's have a look at the charts and get on with the story. The story goes like this. This is the 20-year. This is the biggest of the HVF setups and calls that we're making, and it says a 7.57. So Labour is going to face, in the not too distant future, a funding problem. And let's just be clear, they didn't go stimulus, they go, we'll tax more. We're going to take more from the citizens. Oh, the market liked that for bonds. The market liked that. You know, it's a more direct tax, and we're going to cut benefits. Which is not very Labour, but anyway, but they're going to do much less cutting of benefits and much more taxation. And of course, all the millionaires are moving at a rapid rate to where we've said capital formation, technology, the new landing for, you know, the wealthy is going to be Dubai, UAE, etc., etc. We've spoken of that before as how the money is moving, and a very specific loss of millionaires in the UK is happening right now. In fact, we'll have a look. There's on one of the X. There's a nice chart. Anyway, this broke out from around about 4.9. This whole structure was pivoting around 4.5. So you appreciate that 7.57, almost 7.6, is some way away from 4.5 as a call that we've made, and it's now at 5.33. By the way, that was the spike high of trust, which was 5.19. So we are now higher than trust. Of course, it was far more disorderly and rapid under trust, but it is still a lower number. That is September. That ran into the September that led to the crisis on the stimulus budget that Truss and them were doing. But overall, 7.57, that's going to be a much larger move. Now, when it was at its lowest point, round about here, 2.19, you have to realize that our call on debt markets was, you guessed it, way back in 2020, and it wasn't just America's debt blow off on the lows there that had the absolute lows. Britain was at 0.5s around about here, and at the absolute low on the 20-year actually traded as low as 0.8. 0.8, the US was 3. So the whole debt change and turn the trend change that was called by us in 2020, macro technically, applied to all debt markets, not just the US markets, and that the CV19 events was a flush out of absolute fear and the last time you could get debt out on the cheap. And that was a bottomless overdraft that a lot of people exploited and abused. And we said this will continue up to rise. Then it got to these levels, it slows for a while, but then you get this continuation pattern and you go further. In short, it's a debt-based collapse. Ever heard me say that? Yes, you will have. 7.5, you will spike and it will get disorderly, and you've already seen one example when that happened. Note how strong it was up into there. You kind of had a falling wedge into here. There you go. And then next thing you know, that's Liz Truss's moment. So not only was Liz unfortunate, many governments, conservative ones usually, have done stimulus budgets before, but not after a macro turn in the debt markets. No one told Liz to watch the Market Sniper channel and to be aware that the debt markets are far more sensitive now. Far more sensitive than they were. The 40-year bull market is over. People don't want to buy that asset anymore. Financial repression is here. It will pay a much lower yield than the true inflation, and it will be eroded away in value by inflation on the whole. In short, it's going to be a negative yielding instrument, and nobody wants to do the not-for-profit trade. Not on their book. They're quite happy for other morons to sustain the system for them. and that's kind of how it's gone. And that's how it will go. So this is turning up, second interim, and at some point I think a blow off and you make the 7.6. Now that's an insane number that's going to make many people very uncomfortable. In fact, the last time you saw numbers like that was the crisis where you saw bond traders saying, who wants my house? Because they could no longer afford their mortgage payments that were about to be dropping through. That was, of course, Black Monday and George Soros, who broke the Bank of England, all part and parcel of funding him so that he could do the open society agenda. You do understand. The politics makes the mistake for the amazing hedge fund manager who's so talented to exploit, and he gets told it's a one-way direction, goes big and as hard as you can. He makes billions and funds an agenda that actually sees low culture, rocket scientists and engineers flooding into the border to upgrade the British population. You understand. You do understand. And of course, all the Brits, many of you, I was talking to John Hamer. That's going to be released on our Reset Sniper site. You can watch there. John Hamer, who is famous for the falsification of history book. He says, in his opinion, that will be that all the official male residents will be conscripted into some form of a war, potentially, and that will leave the new immigrants and the white female population alone, much like Ukraine right now. So I hope he's wrong. I hope he's wrong. Let's hope he's wrong. But I do not like the trajectory of the UK. So that is the GB20. Let's have a look at the 30, which is a longer term yielder. Let's get in on there and let's put that one on there. So that structure changes slightly for our HVF setup. I will draw it for you how it'll look. It'll look something like that. And I must make that adjustment there. So this one on a more shorter term basis is a smaller and shorter pattern and is more likely to reach its fruition even sooner. So the long-term debt, and go further, by the way, in due course. So that's the weekly chart. But if I pull this through over here, and again, that's Truss's peak Liz Truss, which of course was saved by the Bank of England for a while at great cost, only to go higher, in due course, which it is where it is now, 5.45 on the 30-year. Note that it's more expensive to borrow long now, and at that point you were at, let's get you the number, peak Liz Trust was 5.12. 5.12, now 5.43. So in a not crisis environment, it's more expensive to borrow for the government than it was at a crisis environment not more than 2.5 years ago. So that's telling you the trajectory. We have told you higher for longer. Interest rates are up. We continue to say that despite choosing the highest point historically at a major crisis where the pensions were falling out of bed. They couldn't sell the bonds. The bond market was crashing, the rates were spiking, and the pound collapsed. By the way, it might be worth pointing out, rates up, currency down. That happened for the US. That was never supposed to happen for the US. Rates up. Everyone who drinks a milkshake thinks that the only thing that can happen to your currency when the rates go up is that the currency goes up, not if it's being divested. So if we put, instead of the Korean won there, we put the GBP USD in there, during that period, you will see that coincident with the rate spike was actually a pound crisis. Why? Debt market fears. Please understand the relationship between debt and currency. Please understand currency and money is borrowed into existence. Every pound has to be viewed as GBP plus a gilt, USD plus a treasury, or other borrowing instrument. It could be a T-bill, a shorter term one, or whatever the case may be. And that's why you had a run-up spike in rates, but you actually got a sell-off low in pound. They had to, it's diametrically opposed. Debt down, over here, rates up. And as you saw also, it was a bad thing for Britain. Money out. Hot money, flight capital out. Same happened for America. For those that don't think it can happen to them, they're too big, they're a hegemon, the dollar is the most proliferated currency. It would never happen. You just had it happen. We predicted it was going to happen after this event, and we said that's a microcosm event that will occur for you too in America, and it did, and it has. And then the tariff suddenly got reined back, and we said, okay, we effed around and we found out where the line was, and that's kind of how it goes. So this points to a 6.1. You've been gestating on this slightly smaller setup. This is going to come a lot quicker and will in the end go a lot higher. Don't forget the 20-year 7.6. So there's slightly bigger time frames involved on the 20-year call. The setup on the 30-year is shorter. It's going to happen sooner, and it will also go higher anyway, but the pattern is for here, there will be overperformance. Since meeting the interim level 2, you've gestated for a while. You can see there's a kind of stall box, but it's actually got a little bit of an ascent along the bottom there, and you're beginning a process of where you are dribbling up to the upper level. This is going to make borrowing ever more expensive. So 6.1 to fall. Once that's happening, don't forget the 20-year will also be moving on its far bigger target. There might be a pause for a spell, and then it goes a lot higher at the same time as the 20 years making 7.5. This will probably have to go 7.75 and even approach 8%. Wow, you heard me say it here. Numbers no one ever heard. By the way, we did the exact same on Japan. It was our least watched video, and I kept being told, people don't care what's going on there. I said, I don't care. That's what needs to be told. Then suddenly everybody was a long-term rates commentator on Twitter about the Bank of Japan's rates now hitting 3% on the 30-year, the 40-year debt instruments. That is the equivalent of these currencies, these debt instruments, my apologies, going to 6.1 and eventually 7.5 for the 20-year and the 30-year. Not good. Borrowing down. Oh, Keir Starmer, we will fight Russia. We will fight Russia. Yes, okay, that's what happens when you get a World Economic Forum bender as your prime minister. That's exactly what happens. He's there to destroy your currency. It's an action of intent. He knows it. He's admitted his chosen bloodline as well in a recent tweet. Let's have a look at other unrelated news. Let's start with this one. Parliament launches the biggest pandemic drill in history. So you've got money to burn, it seems, back there in the UK. Your government does, running drills. Pegasus, the new biosecurity centres. Biosecurity centres? Biosecurity centres. Ooh, bio. And a resilience academy. A resilience academy. Isn't that lovely? They're all part of the plan. They want to do it. This pulls together. They are running drills for a pandemic. In August, that's right. And I'm saying to you, you're getting an interest rate spike and your borrowing costs are going to go up. They're going to be running drills for a pandemic. They're busy telling you. And in actual fact, another time they ran drills, and that was the anniversary not so long ago, 2 days ago, the 7th of July, 7/7, some of you might recall, 2005. I was in Britannia during that period. And what actually happened? They were running drills of bombing at the exact same stations at the exact same times as reported on the BBC. So they actually ran a drill on certain tube stations and a bus station that was just outside the Tavistock Institute, by the way. And it all just happened just exactly like that drill a little later. In fact, the guy said it was incredible. You can watch this tweet. Isn't that interesting? So you're having a drill for August, and other times when you ran drills for things, the exact thing went and happened. And a probability statistician came out, by the way, and calculated the odds on that. And the number was 6 billion and digits. Okay? So you've got billions and digits. So I hope nothing is being prepared for you out in the United Kingdom. Also coming in, the World Health Organization. Starmer signs treaty giving World Health Organization power to recommend lockdowns. I'm just totally unrelated news things that I'm just throwing in here for our British audience. Yes, there is the chief Nazi there from the World Health Organization, obviously sponsored and everything else. Yep, very, very interesting. By the way, going back to the debt, because, you know, conspiracies, coincidences. OBR sounds alarm over vulnerable British economy. Vulnerable British economy. Chase out all the rich people. Tax the bejesus out of the middle class so they have less disposable income. And you know what? Your businesses sell less goods, sell less stuff. You get less tax because even those non-paying tax people buy things, pay indirect taxes, pay non-dom taxes, etc., etc. Send them all to Dubai because they're deeply unwelcome and you're creating a culture of envy because you are essentially a communist. And you have Miliband, the son of a communist, as running your energy policy and maybe soon to take over from Rachel in accounts. All of this going along. Fiscal watchdog issues damning verdict. This is called establishing alibi. We did say so. You did nothing. You said that to protect your reputation so that you could say, back then we were on record for having said so. Nothing happens, nobody listens, they go and destroy it anyway, and then the permanent government that actually talks out of both sides of its mouth, warning you might cause a debt crash. Hey, we've got to plan this total controlled demolition here so that we can strip all the assets out of the peasants and tax them into a nothingness so that UBI, after next pandemic, after a drill, who knows? I'm just guessing. Wonder what's going on here. But anyway, the UK debt environment is looking terrible, and we're doing a little bit of a deep dive on all the many things. And it's one of the reasons why we say you can leave. You can leave. One of the hardest things, people say, I don't have the money to leave. What do you need? You need a passport, a willingness to work, and a right to stay in some other nation. If you have a British passport, you're entitled to stay or come as a tourist and make application or get a work permit anywhere. People say, but where do I go? Where do I go? It's up to you. My circumstances saw me take one particular course of action. Yours will be something else. But let me say this. Tax scavenge mode is being invoked already in Britain. It will come for America. It's already coming for Australia, Canada, New Zealand. They will be taxing more. The cost of debt will go up more. Nobody wants to buy it. It's a not-for-profit asset, which very few people buy unless they're spending on your account, which is governments where you are accountable. Bank of England holds the citizens accountable for the debt. You're all on the hook as a taxpayer for at least £10,000 plus, whispered Blackbird in my ear. That's right. You are accountable for that. It is your money that they're sending to Ukraine and Israel. And of course, flying sorties from Cyprus to help bomb Lebanon, Iran, shoot down missiles, play war games, all on your account, while telling you they must cut pensioners' fees that are paid the whole life for. They must cut pensioners, they must cut welfare and all of that at the same time. That is the beauty of people that have got you cornered and are absolutely taking the pee. And as long as you stay there and you continue to pay tax there, you are accepting that and going, that's okay. You know the dog in the burning room holding his coffee mug, that mean thing? Yeah, that one. You're sitting there going, everything is okay. It feels all right. You know what to do. You know what to do. Don't go down with the Titanic. They want to rush and barge their way to the front of the queue. The charts are telling me exactly what we have warned. We told you when this debt market turned. We told you 2020 was the turn. We told you it's going to keep getting up and more. There's a jaundiced eye on debt now, far more so than before. And now it's had a long period of continuation pattern and relatively staying out of the news. Relatively, but it is building, growing, and it is set up HVF structures which will see higher rates apply, which will crash your property markets in all the nations that I've mentioned. It is absolutely coming, and the chief communists are there orchestrating it so that they can then tell you that capitalism failed time we try a UBI biometric-based technological communism with social scores and more equality. More equality, yes. We must become a fairer society. We must all be equal. You can all get a stipend of UBI. That's right. And everyone can wear the same shirt and jumper and live in the same flat with the same toaster. Smells like Bolshevism to me. Descendants of Bolshevik communists, bringing Bolshevism to United Kingdom. Who would have thought it? Who would have thunk it? Destroying the great nation. It's a great, great shame. I have vested interest in that country. I want it to be strong. I want it to stay. I am telling you, it's in the worst trajectory path that it has ever been. I've never felt more gloomy and bearish about Britain, and it is actually going to outperform on destruction. Even the United States, which has gone full ball, Zionism, APAC, ADL. There's no list. There was no crimes. Prince Andrew paid 12 million to somebody for no reason to hide, who wasn't trafficked anywhere by anyone, by the way. Okay, so that's your world. That's your blackmail society. That's what's going down. That's what's coming on the financial front for Britain. Real doom, real targets going to getting smashed to the upside on your rates. And it is going to bring poverty cuts, further social cuts of all forms of support that you rely on, reduced quality of public transport, increased prices on public transport, worse quality of roads, increased usage and charges for road usage, greater tolls, more cameras to make it less attractive for you to drive or to extract further revenue out of it, more everything that's part of the biometric surveillance grid. Britain is pushing itself to the front of the queue of every aspect that is communist. And they will tell you it's because capitalism failed. That's right. Okay, till next time, more cheery news from the dark side. No, freedom awaits you on the other side. You can leave. You can be better. You were built strong enough for this. You were built to survive. It's time to think the unthinkable. You can go live elsewhere where you will be treated better. We are here to help you with that. We are here to help you trade that and get wealthier through doing that. Go check out the Swiss franc JPY. Go see what gold's done since our HVF call at $2011. Go check how platinum's recently performed. This is real upside for you potential. With every major negative chunk of news is a huge opportunity, often to the short side if you're shorting British debt, but also to the long side on the instruments that are true sound money like precious metals and many other things. We continue to expect upside continuation patterns on gold, silver and platinum for new highs. There are many ways that you can build actual wealth out of the skullduggery of scoundrels. You can build actual, real, significant wealth out of the skullduggery of scoundrels through investment. We don't day trade. You're not going to sit on 9 screens, pops. It's a set and forget trading system. You click the link below. You too can learn HVF method and start your resurrection, your phoenix, where you can work from anywhere, coffee shop with internet connection, and probably do a whole bunch better with far less tax extraction as well. We help with not only building wealth, preserving it while you are building it further, and freedom and optionality of movement. Till next time,
tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.